Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking once more about IVR, Invesco Mortgage Capital and Corporations. Now, I did talk about IVR before, but hopefully today I'm going to be giving you a good amount of updates, a snippet of due diligence I made before, technical analysis, and the latest news. So without further ado, let's jump right into this one. So IVR. Just as a quick overview again, they have the strategy for Invesco Mortgage Capital, and their strategy and portfolio basically goes on with high risk adjusted returns through a portfolio of residential mortgage-backed securities for which a U.S. government agency or a federally chartered corporation guarantees payment of the principal and interest. Residential mortgage-backed securities that are not issued or guaranteed by government agencies, commercial mortgage-backed securities, and residential and commercial mortgage loans. So they operate from strength. Their adversary teams brings in requisite multidisciplinary strength necessary to succeed in today's robust dynamic mortgage securities market. Now, a quick overview on the latest updates, and this is one of the most important one, is their 9 cents per share cash dividends. This is in relations towards the second quarter of 2021. So a quick thing here, the dividend will be paid on July 27th, 2021. The stockholder on record is July 6th. That means you cannot sell before July 26th. And the ex-dividend date is July 2nd, 2021. So if you're not familiar with dividends, that means you gotta buy the stock before July 2021, and you can actually sell after July 6th if you want that dividend. So again, buy before July 2nd, sell after July 6th if you want this dividend, and the paying of this dividend of 9 cents per share will be paid on July 27th. Now, moving on from there, some of the presentation stuff that we did talk about before in my last video, you can watch it in the description below. And while you're at it, don't forget to drop a like to this video, subscribe in the bottom right corner, and leave notifications on. And if you'd like to join this Discord that we have that is totally free, it's in the description below. But a quick overview about the IVR value proposition. So they seek to provide attractive risk-adjusted returns generated by the real estate related investments, primarily through dividends and secondarily through capital appreciation. It also enables investors to capitalize on opportunities in our target assets, including residential and commercial mortgage-backed securities and direct loan investments. They also avoid risk associated with the utilization of mark-to-market funding on illiquid credit assets. The portfolio size will allow IVR to take advantage of shifting relative value opportunities within our target assets. They also provide access to an established global asset manager with extensive mortgage and real estate expertise, including depth and breadth of Invesco management or investments and operation resources committed to support IVR, and ready to access to in-house sector specialists to be utilized as market opportunities evolve. And from there on, we can start taking a look a bit into their income statement. So in this last quarter, yes, they did have negative revenue, but in previous quarters, they did record positive. It's kind of mixed if you were to look at it over into back to the history. So the previous 2 quarters before this one was actually positive. This one doesn't look as good. Now, in terms of the net interest income, that is still somehow positive as you continue going on, relating towards their interest. Although the net income from continuing operations, that's negative. And from my understanding is that fluctuates based on, well, actually, I think they even provided some information here, but it fluctuates on the value of assets that the mortgage itself is holding. So this is the book value per common share kind of fluctuations, per instance. Now, economic returns for the 3 months ending March 31st is calculated as change in book value per common share from December 31st, 2020 to March 31st, 2021, which goes off 21 cents, plus dividend declared of around 9 cents per common share, divided by December 31st, 2021, book value per common share of around 386. Now, if you were to look into the price over book, you're looking into a price over book of around 0.99. The SP 500 average for that is sitting very close to, I believe, around 5 or 462. So it's definitely undervalued in that sense. And taking a quick look into the price over sales, you're looking into 728. The price over sales for SP 500 is around 314. So it's around double the price over sales for SP 500 and also almost 1/4 of the price over book off SP 500. Now, since they have a lot more of, let's say, mortgage holders, it's a little bit harder to say which one to go for. But in that sense, I would say it's on par with the value of the stock market SP 500 average, although I think it can easily double and still be within that range. Now, other things I do want to talk about is analysts. So currently they have one sale or one sell recommendation with a 3.25 downside of around 95% downside average. So that's their PT. Now, in terms of my broker here, by the way, this is Questrade, they give this one a neutral, a 5 rating out of 10. The current analyst rating again is moderate sell, with the blogger opinion being neutral. Hedge fund activity decreased apparently in the last quarter, although the technicals in general seems to be a bit more positive. So you get to see again very similar to what you've seen in the previous information. And their technicals here appears to be mixed, both positive on the SMA, although momentum is negative. Tip rank investors are very positive onto this one, and the news sentiments in the last 7 days apparently is very bullish. In terms of institutional buyers, it appears to be more bullish. People are adding, especially into the 25th of June, where there's hundreds of thousands of shares and millions of shares actually being added. For instance, the Super Dividend ETF added 2.4 million shares onto that. Now, other things you're looking at, for instance, is relating towards insider activity. There's no selling, and that's again a bullish thing. So from there on, let's move on towards technical analysis. Now we're looking into technical analysis on the 1 month, 1 day perspective. We start seeing that the moving averages are bullish in that sense that the 10 SMA is above the 30 EMA, very bullish. The price point is also above the 50 SMA that lies at the 374 level, and the price point is also above the 200 SMA at the 348 level. The ADX suggests that there is a strong trend going on. Currently, this was basically driven by the push from 335 all the way to 460 a bit ago, and the William percent R sits a bit on neutral. Momentum has dipped a little bit towards the negative on the last trading day, and the MACD is attempting to go towards a negative reversal. Now, this negative reversal could just mean nothing more than accumulation, and accumulations aren't really that bad. In terms of the stochastic fast and stochastic slow, both are pinpointing more of an accumulation phase, and I'll give you exact supports and resistances to take a look at, but volumes and unbalanced volume shows that people are actually adding, and currently, again, it's into an accumulation period. Now, in terms of Fibonacci retracement, and I'm only showing you this one just because institutional buyers and high-frequency traders actually use these things. On the resistance part, Fibonacci's are 428, 581, 704, 828, 1004, 1228, and all the way to the 1830. Now, in terms of the current support, it's at 182. And if we were to just take a look into the recent part, let's say around 3 months, 1 day, you're able to see closer Fibonacci retracements sitting a little bit currently at a resistance of 412, 433, and 460. In terms of supports, you're seeing one at 397, 382, 364, and 335. Now, direct supports and resistances from what we get to see is that we have a very strong resistance currently sitting at around the 409 level. Above there, 416, going from there on 425, and then a very strong one at 446, another one at 460, 471, taking a look into $5 and 547. The current support level from what you're seeing is at the 405. Currently, it's barely touching that. And 397 after that, going to 391, going down to 383, and then down towards the 373 level. And then going to 361, going down to 352, 347, going to 340, down to 328, 316, and a little bit down to $3, 293, going to 285, 274, and then down to 270 and 260. Comes to the question to Ed, what do you think about this one? Well, I do believe with this dividend news, etc., a lot of these people would be looking to buy closer to the July 2nd date. Now, from my opinion and my experience, I do see this one going ahead forward and continuing to a little bit go back towards its older days where it was around 1830. There's a lot of room to grow. Now, that was the March dip, and it hasn't recovered ever since then because there has been a lot of questions relating to the mortgage industry itself. So, does it have room to recover? Yes, in the next 5 years. It would either go into basically being broke and it remains to almost like a sub-dollar penny stock, or it does return back towards its $15 level. That's what I feel like. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.